he made a ton of people rich.
What's going on YouTube? Taylor Prentice back here with another video. I'm with my boy Andrew, and today we're going to be talking about 5 investors that you need to know about. So Andrew's going to be giving you guys pretty much a rundown on all of these guys and why you should pay attention to what they've done and kind of their philosophies behind investing.
We made a list here of sort of modern day investors because the list of actual investors is so long that it'll be in a separate video.
Yeah, this will probably be a part 1 of hopefully like a series or many more to come. So
because it's important to learn from other investors, especially the legendary ones. You want to know how they made their fortune or how they lost their fortune. Like there are a lot of lessons to be learned. At number 1,
the GOAT,
Warren Buffett, the Oracle of Omaha. He started at 11. He learned from Benjamin Graham. He credits a public speaking class to be like his route to success. He says if he didn't take that, he never would have handled business the way he does. He started Berkshire Hathaway, which is like a conglomerate sort of. They own a ton of different businesses, and they also have some of the biggest investments ever, and they have some of the most cash on hand of any business in the world.
BRK.B is one of my biggest, probably my second biggest position that I have. So that's a fun fact.
And their Class A stock is almost like $500,000 a share or around there. Warren Buffett goes off of a thing called the Buffett indicator. It's sort of his way to tell how the market's doing, like if it's overpriced or if it's undervalued. In recent years, it's become almost totally obsolete because of how overpriced everything is. And what he's doing is comparing the market to the GDP, and seeing like, is the market way out of control compared to how much money the country's actually making and how much, the economy is actually at? Is the market just way out here? And it is right now. So they've almost like stopped using that because of his like fundamental style of investing that he learned from Benjamin Graham, the author of The Intelligent Investor. He likes to buy businesses for the business. He's not just looking at the stock price or like the technical side of it. He's really looking at, is this business making money, and like, do they have a lot of competitors? Like, can they continue to make money 50 years down the road?
Another thing that Warren Buffett's really big on is buying companies that he can understand. So he's not out here buying companies that are super complex, maybe like a pharmaceutical company that's just hard to wrap your head around the business model. He's buying stuff that most people can easily understand, especially himself. So
it's a big tip for beginner investors, is to use your circle of competence, as he calls it, and not just invest in what somebody tells you to. Like you want to understand how this company's making money, where the money that is going to make the stock go up is coming from, because like if there's no extra money and they've lost money, they're losing money, and there's no hope to make money, why is the stock going to go up? If there's no hope even in the future,
unless it's GameStop or Hertz.
Right. Which has thrown the spikes, like into his plans, because like they've been holding a lot of cash hoping that something happens. So far, like they've just been out. Sitting there. Yeah. He owns Berkshire Hathaway they own Geico, they own a railroad company, they own a lot of different businesses, like totally. And even through COVID, like Geico skyrocketed, because less people were driving, but they were still paying their insurance, so there were less accidents to pay out. But so he was making money a lot of different ways. For somebody that says that you don't need diversification, he sure is sort of diversified in like some safe companies. You know what I mean? And his partner Charlie Munger, they have a annual investor meeting that are pretty awesome to watch. I want to go to one eventually.
That's actually why I bought BRKB, is because I wanted some form of diversity without buying like a mutual fund.
Right. And now, like we said, with how much cash they have on hand, if the market does crash, they're ready for a 90% dip in stocks.
Or to just buy companies that are
that's what I mean.
Like
they're almost hoping that the market does go down by 90%.
Yeah.
Which is pretty scary because the average person isn't. And that he notoriously hasn't trusted tech, but in recent years he's Apple's like biggest investor. So you can tell that even even he's kind of going out of his circle of competence. As far as the current market conditions and if we're in a bubble, I would say it's safe to say that he thinks we are.
Yeah.
And that he's pretty worried that things will go down by 90%. He's literally said that. All right, and the second one on the list is Peter Thiel. He's a co-founder of PayPal alongside Elon Musk. After they got out of PayPal, he sort of landed himself as an investor early on in some of the most major companies, Facebook being one of the main ones, where he was in their second round of funding when the market cap was only like 500,000 or something for the whole company, and now it's like $1 trillion, literally. He's ridden that wave. Google he's invested in. Really almost any of the Silicon Valley stocks of the recent years, he's been a big part of those. He's a pretty eccentric guy in the sense that like he's a contrarian to a lot of things. You know, he likes to think for himself and kind of call out what doesn't make sense. And one thing he really talks about that most people don't talk about is how the education system is broken. And he even has a grant for college students that if they submit a business idea to him, they could win this grant to quit school and start their business. You know, he really hates how the education system gets more pricey, but the quality goes down, and he sees that as a bubble. It's interesting because he sees the bubbles in different places, like where Warren Buffett or somebody might think tech is the bubble. He actually thinks tech is the safe place to be, and it's more of like a currency inflation type bubble, and that there are other sectors that are going to get destroyed because of that. He has a book called 0 to 1, and he's given a lot of lectures you can find on YouTube about it. It's pretty awesome. It's all about how America needs to keep innovating to really be the leader, you know, and sort of all the problems that come along with that too, because it can be cheaper and more efficient just to copy the leader, you know, like instead of spending all that money on research and development and all that. He's definitely sort of worried that China could take over because their population, you know, is so much, and like if they can catch up to us and like they have been excelling. He tries to point out the issues we could face, you know what I mean? Yeah, and as for the current market conditions, he's definitely scared too, but he's, like I said, he's worried about different areas. Like it's not just the same tech bubble, you know, his mind is seeing different things, and he points it all out in the 0 to 1 and basically almost any interview he's given, that you know, inflation is getting scary. Like the Fed is sort of out of control. Third on our list is Michael Burry. He was in The Big Short.
That was how I figured out about him, because I had never heard of him before that.
Me too.
But
I love that movie. I've watched it a ton of times.
If you guys haven't seen that movie, you should definitely go watch it. I think it was on Amazon Prime. It might still be, but
yeah, we'll make a video about the best stock market movies too.
Yes,
because there's some good ones. He's a notorious bear, which you know most people like Warren Buffett buy for the stock to go up in the long term, but he'll buy it for the stock to go down in the short term or sort of the long term. But he tries to identify, like the same way Warren Buffett tries to identify like quantitative things on the fundamental side for the company to go up, he looks for it to go down. So like when he sees a company like Tesla, which he's notoriously been like the biggest bear on Tesla, which he's probably gotten destroyed on.
Yeah, he's had to have. There's no way he hasn't.
Yeah, especially in the last like couple of years. He'll look at the valuation compared to how much money they're making and all the regulation they'd actually face, you know what I mean, and all the competition they'd face if what they do is successful. He's definitely not afraid to put his money where his mouth is with that. And a lot of people look to him to see where the bubble is. They want to know what he's doing right now to prepare for what's to come. He managed the Scion Fund during the 2008 crash, which is what The Big Short is about. He took a ton of risk by doing that, but it definitely paid off. He knew what he was doing. He just didn't know when the system would catch up to what it should. Who knows how long the market can keep going up even when it shouldn't.
Yeah,
you know what I mean?
You never know how long a bubble will last before it pops.
Yeah, exactly. As far as the current market conditions, he's definitely a leader that says it's going to go down. There's a bubble and it's going to pop, and it could be everything. He talks a lot about how just the overvaluation that's out there and like how to get ready for it. Like I said, a lot of people will follow what he's shorting, and he constantly is making moves like all the time to prepare for something to happen.
Yeah, like shorting Kathy Woods. I'm imagining part of why he's shorting Kathy Woods because she, in her fund, owns a lot of Tesla, but the other companies that she owns are just kind of really, really overvalued if you're looking at them like just financially, but they have a lot of the future already priced in and stuff. So those are the kind of companies that he's looking to short most of the time, it seems like.
And he will make crazy long calls too. Like he was a big guy in GameStop before all that stuff happened with GameStop, which is like insane. Like how do you just step in these like
how are you always knowing like when something crazy like that's gonna happen?
Right. Which maybe he caused it. Maybe he caused it.
Maybe he did.
Either way, he's definitely on the list of the current era influential people because his influence for the Bears is almost unmatched. Like he is like the big bear.
Short. He's the big short. I'm not like super on trend with like modern investors, like big popular ones, but as far as I know, he's the only one that is like a guy who shorts that's super well known. So
he definitely is like the hot one.
Yeah.
So fourth on our list is Peter Lynch. Peter Lynch is a little bit older, but he's still super relevant. In 1977 to 1990, he led the Magellan Fund, which he averaged a 30% return each year, which is insane, because like you're supposed to have a good year and have a bad year, and kind of even out around like 7 to 10%. That's kind of what the average is. But he was getting 30% each year, and that led him from $18 million to $14 billion with a B. He made a ton of people rich, and then he sort of closed the doors on it. 1990 or whatever, I guess it was time to teach instead of play or whatever. He's written a lot of books that are really good for the average investor. Like Beat the Street is one that I've read. And it's really awesome how he gives advice to, people like us who aren't the big financial institutions, and he points out the edges that we have compared to them for certain things. Like if we want to invest in something that we see today that we know is like hot, we have more freedom to invest our money than say Chase does. They have to have a whole meeting and like it has to go through a lot of people, and then some things they just literally can't invest in. Like some mutual funds can't invest in crypto because it's not in their things that they are allowed to invest in. You know what I mean? So
yeah, because if you have like a client that's some like super old lady and you don't want to be like, oh well, we put all your money in Ethereum, so they're probably not going to stay with those companies if their money's being invested in stuff that they have no comprehension of.
Right, and he's definitely a long-term investor. He tries to get 10 baggers, which is a stock that goes up 10 times. And sort of like you were talking about with crypto, he'll throw it at like 5 different ones and hope just one of them goes up 10 times. The others might, suck. And one thing that he does, which is cool, is he points out how sometimes his family will actually help him make those investment decisions. Like he'll ask his daughter or whoever, like, what's a product that is on fire right now for you? Like what's something you really want? Or like what are you using? And he'll realize that like the common person has their ear closer to the businesses in that sense than a lot of the investors do. Like the 80-year-old, people on the board of investors.
That's like
they don't know like Snapchat.
That's like Activision now. Like why I've kind of gotten into it is not even so much from a investing standpoint, is more like I was just watching videos about like the new Call of Duty or whatever, and all the content creators that are making videos about Call of Duty are talking about Activision and like what's going wrong with them as a publisher and all their company problems and stuff. So that kind of led me to like just look at their stock price, and they're at a 52-week low. So you never know like who's going to give you like the hunch or whatever. So like he was saying, it's good to use Peter Lynch's philosophy of just kind of taking information from whatever and then doing your research afterwards.
Peter Lynch is a big proponent on sort of the opposite of almost everybody else on this list, that you can't predict bubbles. He says it's futile to try to predict what the economy is going to do, because like we said with Michael Burry, you could be right. Like you could have like all the statistics and stuff, and you could know it is overvalued, but that doesn't mean that the stocks are going to go down. There still could be new money flooding it.
And it's like FOMO. Like a lot of times when stuff's at the top, new money just keeps coming in because people are afraid that they're missing out on stuff. So it just keeps going and going and going until people are eventually out of money. And you can never really predict when something like that's going to happen.
As far as current market conditions, his biggest point is that you can't predict that, like you said, and that more people have lost money trying to predict crashes than the crashes even caused, which really kind of stands against even like Warren Buffett or Michael Burry or whoever that is actively trying to predict that, everything is going to crash. He's sort of on the field where, like, even if everything does crash, his money's so long term that, like, it still should be okay. Even if a Great Depression were to hit, he's sort of the optimist on the list for sure. But definitely check out Beat the Street. That's a great book by him. Last but not least on the list is Ray Dalio. He founded Bridgewater Associates, which was his fund, and he sort of rose to fame around the debt crisis and the housing market collapse of 2008. And before then, he was known. But he really spoke out against the factors that he saw. He would look for quantitative things like actual, numbers and like the CDOs or the housing market and everything and inflation to say, no, this is a bubble. Like, housing is going up, but the average income is staying the same or going down. Like, how does that make sense? Eventually it's going to go down. And that's actually what he says is happening now too.
I would agree with him there.
Yeah, it's hard not to, sort of. He has a lot of famous things that he's done. A lot of people, I feel like, might not even know it, but on YouTube, he made a series called Principles by Ray Dalio. It's only like 30 minutes or so, but he breaks down the economy in like such a clear way and like sort of how the money flows around and like what inflation is and like what that causes and like how the banks can get squeezed when money gets tight and how when you sell it can snowball, because it's causing all these other people to sell. It causes money to get tighter, which just causes more people to sell, and it can kind of compound in that cycle. Like I said, though, he likes to focus on currency and debt, and he's even made his own indicators that people use, and it's like well known. He's made his own terms like risk parity and currency overlay, and he focuses on the currency and fixed markets much more than any investor on this list. Like where Warren Buffett and Peter Lynch, they buy shares of stock, he'll focus on currency and fixed income things, to where he's sort of playing a different game and looking at it a little bit different. As for current conditions, I'd say it's safe to say that he thinks we're in a bubble too, and he's talked about how inflation probably isn't transitory like the Fed said. He'll kind of speak out against the Fed and be like, well, I mean, that's what they say,
Yeah.
But like they're going to say, certain things to kind of calm people's nerves. So everybody should check out Principles by him because it's a great book and series on YouTube.
So hopefully you guys enjoyed Andrew's list. I definitely need to dive into these guys more and do my own research on them too. Really the only one I'm super familiar with is Warren Buffett. So I mean, pretty much everybody is if they're into investing. I feel like he's kind of like the first guy that you just learn about and learn from. But I'm definitely looking more into diving into these other people on the list, and hopefully we'll get some more lists for you guys here soon. So if you could hit that like and subscribe, and if you guys enjoyed it, just give us a follow on Instagram. I'm Taylor Prentice, TGOD. He's Studio Drew 317, so you guys can find us there. Thank you guys so much for watching, and we will see you next time.
Peace out.
Deuces.